Hi everyone, it's Monday, July 31st, 2023. Right now it's midday and I've just closed my SOXX SOXX trade and took profit on it. Okay, let's go to the chart. This is what we have. Alright. So I have opened this breakout trade this month. This is the only trade of this month actually. Well, it's July, I'm a little lazy. I wasn't really active looking for trade, but I saw this trade came in. I opened it. I opened it on the back of that. This is a breakout on this bar. This breakout bar, and then on the next bar, when they make new high above the breakout bar, open the trade. This trade, I just use option. I sold a vertical spread of 485 options, and I bought a 480 put options, basically. Okay, so it's a vertical spread, a $5 spread on this. And at that time, it was an 18 delta on the 485. And that's good. Anything below 20, I would do it. The only thing is that the risk reward of this trade is not as good because of the very low volatile environment. Basically, VIX was sitting at very low, like 13, 14 level, right? These couple months is low. VIX is sitting at the low. So it came off. So I don't get a good risk reward ratio on this trade. This trade is a 1-to-8. 1-to-7 risk reward ratio. Typically, I want at least 1-to-4. So this is a little bit out there, but it's a breakout trade on back of a long-term uptrend. So SOXX, the semiconductor index, this whole year is about AI. Right, 50% of this up market this year is AI-related stock. So again, SOXX has been going up this whole year on this long-term regression channel. This is 6 months plus. And once it stays above this red line, which is a 200 moving average, is kind of in the bull territory for the technical traders. So it went up sideways, and then recently on May, it went this huge momentum bar. This is this green bar. This is the NVIDIA days that it topped the whole sector. Everything went up. Right, on this up, and then I'm like, okay, now I have momentum. Now I want to look for a breakout or retracement and a false hammer, and then continuation of the trend. That's why I've been looking at this whole 2 months is looking for these trades, and they all worked out. The June trade works out on the upside, and July trade, I only have this trade on, and it's a breakout trade. Breakout trade usually is 65%, 75% winning potential. So I only use options on breakout trade and give me even higher probability. What happened is I opened a trade, it went up for a couple of days, and then it decided to turn around and become a false breakout. It broke back below the breakout line, right? So it went down here. But it stayed up above this white line, which is 21 days moving average. Look at this. All right. It broke down for 2 days, and then it became a doji star inside day, and it tried to break up again, and then came back a little, penetrate, and then it always closed above this 21 days moving average. All right. After I took the trade. So I'm in good hand. It's also stay above this long-term regression channel, the higher quadrant, the 50% upside of this long-term regression channel. We say all these bar, right, since the breakup. So I'm in good hands. I'm like, being a bull is good. Having a long trade on this is good. The market, this SOXX, this index, tell me is still the buyers are in charge. So I held on. That's all. I have 2 options. I go held on to the end. Right, let it expire, because I won't lose money until it came back down, all the way down below 485. In actuality, I won't lose money unless it go below 484.25 because I have $75 of premium on this trade that I collected. So basically, the scenario was open the trade, it continued to move up. I touch the top of the channel, I've closed the trade, take the profit. When it go to this resistance line, which is a long previous peak, which is all the way back in January of 2022. I close the trade, I take profit. Or let it drift sideways. Eventually 50% of a maximum potential. My maximum potential is $75, so it's $37.50 on each contract. I close the trade. Alright. But now that it bounced off, I'm telling myself that okay, I can hold on a little bit longer, and then instead of just 50% of the maximum profit potential, I close out at close to 70%. Today it reached 66%. I close out, I took $50 on each vertical spread I have, and close all the trade because there's not up momentum. The other thing is because of this nice little MACD, MACD, it decide, you see how is the peak is lower low on the peak, right? This peak is lower than previous peak while the market make new high. That tell me that momentum is dying off. This is a convergence. People who look for trend reversals will look for these using these conversions, and they will trade the trend reversal. That means the profit taker, the sellers eventually might comes in, but the momentum has subsided on the upside. It's getting tired. So I took the profit. Close to 70%, and that's good. And that's all. Take the profit, be happy. End of month, make some money. Took a good trade, took the good setup, did one of the possible scenario. It could go up, it can go down, or it can pull back and go up again. And it did pull back and go up again, right? So on back of false breakout, and then eventually it try again, but the momentum is subsiding. Take profit around 70% of my max profit potential, and that's good. That's a good trade. I always look for good trade, because good trade will give you money, will make you money. I don't look for to make money. Okay, it's kind of very, very psychological in that sense. I trade for good trade, and the money will come when you make good trade, when you make good decisions. You don't trade to make money, because money is actually secondary. Money will come when you make good trade, when you make good decisions. That's how it works. You can say, I need money, I go to the market. No, it doesn't work that way. It never worked that way. You make good trade, what does that mean? You make good decisions, and then money will come. You make good decisions, that means if it is a trade, you follow through, even you lose money, that's fine, because you have this probability on your side. Eventually make good enough trade, right? You're like the casino owner. Right? People come and play enough, you will make money. You're the casino owner. That's how I always look at the market as a trader, as an investor, that you put probability on your side. That's all you need. You put good probability on your side. You follow through with good trades, make good decisions, follow through with your plan, and money will come. And exactly this is what happened. Even it went against me in the beginning. A lot of people say, oh, this is a false breakout, then they got to get out. That's what most people who do an outright breakout trade will have lose money. But when I use options and follow through, and use on top of just basically experience that my game plan tell me these are 3 possible scenarios, but 2 out of the 3 possible scenarios, I will make money. I will have good trade. Even if it goes down, you have to go through for me to lose money. Of course, if I lose money, I lose a lot more, because only is a 1-to-7, 1-to-6 risk-reward ratio, right? But probability is on my side on this trade. I am just following trend, using option pricing, and reading the market telling me that it's still strong. So I held this trade for how long? 2 weeks. The total, it was 4 weeks until expiration when I opened the trade. And typically, you want to close the trade 1 or 2 weeks before expiration. That's where the premium really start dropping, and you can buy your short option back at a lower price. Remember, I shorted, so I have to buy it back. And as 66% profit goes to 70% profit, right? I got to hold on for another 2 weeks to gain another last 30%, 34% profit. No, that's not worth the risk. I'm in the money already. Take the money. All right, that's how you really make money. Is when you're in the money and you look forward and you look at trade, look at the market, and you put a little projection and say this is not as strong as I expect. All right, but I still in the money. I still can take profit, and a good profit, and only 2 weeks till expiration. I don't need to risk. Right, I end up risking everything for only 34% more, 33% more. It's not worth it. Right now, close the trade, be happy for the month, did a good trade, and that's all I need. One or two good trade a month. If it comes, that's all I need. Right. And that's how good trading work. I don't need to be all over the market chasing after trade after trade. I just need to find good trades, execute it, follow through with the plan, read the market what they want to do, right? And take profit when the time is right. That's how it works. And it worked out perfectly, beautifully. It's one of the three scenarios, and chances are, probability wise, I will make some profit on this trade. I don't have to wait till the end, take maximum potential profit. I don't need to go through the roof. I need to just stay above the breakout line. That's the beauty of using options. That's how you can skew probability on top of the technicals. That's how you make money. When everything comes together and skew all the probability to your side, use the right tools, learn how to read the market, the good setup, right? And make good decision process. And then money will come. Just like this. Even when it went against me a little, but it was staying above, everything was still in line, as I hoped, as I thought, and I expected. You know, yes, it could have turned around and go down, but I was still moving money in the end until it crossed that line. Until it really turned weak, I mean, right? Because you got to cross the 21 moving average and then cross over the upper long-term regression channel, the upper quadrant, upper half of that, and then you got to go through the blue line, which is a 50-day moving average. Of this technical level, it got to push through for this trade to lose money. All right. So it was a good trade. It was a good setup. It's not as good as False Hammer. I would have went all in on False Hammer, but this is a good trade. Alright, so that works out, and it works out beautifully. And that wraps up the whole month. This whole month, well, there's just one trade, and that's good enough. One good setup, one good trade, make some profit, be happy, and walk away with a profit. Alright, look at today. It was green bar when I closed the trade. And it went into red. Who knows? All right, it might go green again. It might go towards the resistance line on top of the channel, or it might go sideways. But for me, there's no need to risk this trade anymore. Make more than 50% of maximum profit potential on option trade, and that's all I look for on a good technical setup. And that's all you need. And that's how you can make money. So repeat the process that has probability on your side, right? And plan everything out ahead and think of the scenario that can unfold, and when are you going to get out? Because when you open a trade, eventually you get out. You got to think about scenarios getting out. This is one of the possible 3 scenarios for me to get out. The other scenario is it keep going up, right? Then I'll hang on probably another week, but it doesn't. Momentum is dying down on my MACD, all right? So that tell me, okay, I'm close to 70% profit. Why not? If it goes down, I would time on my side. I have 2 more weeks for it to do another move, or just stay sideways. and I may close the trade just flat, not making any money, or just a little premium, right? If it just goes sideways. I'm looking for a point where I want to close the trade before expiration. The only reason I will hold till expiration, to tell you the truth, is that it went through the roof, went up that the delta compressed to like 0. Right now, when I close the trade, when I open the trade, the delta was 18. When I close the trade, the delta was 8. It went down, right? So from 18 to 8, if delta continue to be 0, that means it went up beyond this line. That means I can hold till the end. Otherwise, I won't bother to hold the end. I don't need to risk it. I don't want to risk it. Because the market will turn around when I do a double top and start coming in. Why do I want to risk that? I'm already close to 70% in the money on maximum profit potential. Alright, take my profit, pocket it, and be happy for the month. Done for the month. One good trade. That's good. Now, next month, I will look for another trade. If it comes, it comes. If it doesn't come, it doesn't come. Ideally, the market pulls back. I look for false hammer. If market decide to go sideways, okay, we'll see. If market breaks up, maybe another break-up trade, all right? We'll see. I pull back, I have a trade. Breaks up, I have a trade. If market collapse, hey, then if it want to collapse, I just want wait and see. All right. So sometimes you have to step away from the market. All right. But on this, I'm still looking for another uptrend trade. I'm riding this trend. I'm a trend follower, to tell you. I would follow trend. I am a trend follower. That's give me the highest probability trade. Sometimes do reversal, but I don't like those. Like right here, I could be looking for reversal. In actuality, if it give me a few update and then you have a lot of penetration and a lot of tail, I might do a reversal. That's my dust setup, which give me like, I would say 55%, 60% probability on a reversal trade. It's a harder trade to win in actuality. Yeah. But that's the nature of the trade. So false hammer, 85%. Breakout, 75%. Reversal, 65%. Maximum winning potential. That's how I pack it. Okay? Yep. So that's that for today. It works out beautifully for the month. Thanks for watching, and I will see everybody on the next video. Have a great one.